With the retail inflation in the US coming in hotter than expected at 8.6%, market concerns have resurfaced that action from the Federal Reserve and other central banks could risk tipping the economy into recession. The fears resonated in the markets yesterday as equities crashed, emerging markets currencies hit fresh lows while bond yields rose the world over. Back home in India too, stock markets cracked heavily with the S&P BSE Sensex dropping 1,457 points to end below the 53,000 level. The Nifty 50 meanwhile tanked 427 points to give up the 15,800 level. The Nifty Bank Index also dropped over 1,000 points to settle near 33,400. Investors now fear that inflationary concerns have broadened in the US, going beyond the known drivers such as supply chain bottlenecks and energy shocks. In India, market participants are worried that the country's sticky retail inflation in May could turn the Reserve Bank of India even more hawkish. Going forward, experts see a hazy near-term trajectory.
So the Fed rate hike is digested and discounted by the market, and so is RBI hike that will come through in future. The problem is, the constant selling from the FIs and the global market correction. It's not only that our market is corrected, globally the markets have corrected. We could possibly see downtick in the market in the near term, but long term, I think these are great opportunities for investors to buy quality stock, selective in certain sectors and all that. Short to medium term, there are a lot of concerns and overhang which we'll have to possibly face.
Technical charts too indicate around 2% downside potential in benchmarks as they hover around crucial support levels after Monday's mayhem.
A firm gap down session on Monday is triggering a negative bias one more time. For both the indices, 100 weekly moving average becomes the immediate support. For Sensex, it is 51,250, and for Nifty, it is around 15,300 levels. These are the key levels and the key average that could provide some ground, some stability for the benchmark indices. In terms of other significant index, if we look at Nifty Bank, it is trying to hover and linger and trying to find support around the same 100 weekly moving average, which is currently placed at 33,100 levels. In terms of the most battered index, which is the IT index, having had the formation of head and shoulder and a breakdown that violated 50 weekly moving average, and to a certain extent it did break 100 weekly moving average in recent time. But one good thing about the Nifty IT index is it soon regained and closed above 100 weekly moving average, and now it has come back to the same level. So for the Nifty IT index, it is going to be 100 weekly moving average. If it manages to rebound again, we could see some stability. Otherwise, if it stays under 100 weekly moving average, we could easily see a fall of another 3 to 4% in Nifty IT index.
Against this backdrop, Tuesday's market session will be guided by global cues, trajectory of bond yields and rupee, crude oil prices, and India's retail and wholesale inflation data.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
तुम इतना डर गए? अब क्या किया?
शेयर्स में ट्रेडिंग।
तुम्हें 5 पैसा नहीं पता?
ओए, अब तो सबको पता है। 5 पैसा पर मिलते हैं रिसर्च टूल्स, पोर्टफोलियो एनालिटिक्स और इन्वेस्टमेंट आइडियाज भी। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.